Hi everyone, so welcome to Investing for Value. So today I'm talking about Inmode because their results just came out, and as you can see right here, revenues were really good. Like it grew $56 million, and it well basically 56%. So you can see that's amazing growth. And what's more amazing about this company is everything it earns really translates to the net profit. So you can see this year net profit was $61 million, up from 22 million, so almost triple, which is amazing, right? So you look at the net, revenue, and revenue grew 56 million, and about 40 million of that went to the net profit. So this is a company, once they have an established base, they have an established sales team, more sales just literally mean more net profits. So looking at this result, you gotta wonder, you gotta go, well, why did this basically mean the share price would drop? Because the share price has dropped over 7%, and it's not a good look, is it? Because you must be going as an investor, like they just posted some of the most amazing results, yet the share price went down. What happened? Well, their forecast happened. This company is expecting about 190 to 198 million in revenue. So when you look at this, uh, it's growth on this, but it's only about 22% growth on the lower end. So if you look at 20% growth compared to 56% growth, of course investors are going to be a little disappointed, and I don't blame them. I didn't see them slowing down so quickly either. So it's a little disappointing. But in saying that, I think this company is still very much undervalued. Because like if we look at this next year, they expect to make about 76 to 80 million dollars, which is, it's not a significant jump from what just happened this year, in their results, but it's still quite incredible. It's still about 16 to 20 million higher. And even if I look at the current results, right, and we go, this is a company that's growing at least, like by 20%. If we go $61 million and we go like it's still on the borderline of a growth company, um, and we looked at the net income and it's 61 million, and if we gave it a PE of like 25, and I say it definitely deserves a PE of 25 based on the results, this should be a $1.5 billion company. And it's just valuing on the results that have already come out. These are financials that have already come out. And usually markets like to like price in things in advance. So this is a company that should more or less, like even on 76 million in profit, should be, like for this year, it should be closer to the 1.9 billion mark, which currently it's at 1.3 billion. So at 1.3 billion, I think it's still undervalued. It wasn't as undervalued as I thought it was going to be, given the slowdown in the growth rate. But this is a company that's proven that it's really good at what it does. It earns brilliant margins, has patents on its technology, and continues to expand to different countries. So this company's already like recently expanded into like Australia, India, and recently it's going to be expanding into Korea, Japan, and quite a few other countries. Um, so like growth has slowed down, but I think growth, this company will always keep growing because of the new markets it keeps on hitting. Like if you count the new markets that it's heading into this year and the ones last year, that's well over 10 new markets that it's coming into. So I don't see the reason for anyone to be too pessimistic about this company. Like the growth rate did drop quite a lot. It did go from like 56% to potentially 22 to 25%, which is quite a big drop. Though you got to look at those net profits, and those net profits really look great. Like the minute this company starts going, oh, we're going to pay dividends. Imagine how much dividends they're able to pay, because like those net profits are just going to be piling and piling and piling on. Right now they're in like a growth mode, so maybe they don't want to pay dividends. Though, you know, like they do have like 180 million around there. Well, yeah, actually close to 190 million in the bank. Like they've got the cash, they've got the marketable securities, and they've got the short-term deposits in the bank. So in this regard, you can kind of see like this is a price. This is just like it's dip, but I say this is like buy the dip. Like this is still a really good company. Though I think investors kind of had a bit of a shock. Even I had like a bit of a shock, and then it took me a little bit more time to just like absorb the information, look at it, and you know still feel positive about this company. Like originally, I thought this company might be worth over 2 billion, but right now I think a 2 billion mark is not bad for this company. I think it's a very achievable mark, and currently it's at the 1.3. Like this leaves an upside of about 40 to 50% on the current valuation for this year's results. You know, when they actually, you know, probably by end of the year, I can see this company being worth a lot more than it is. Though I think the share price has taken a bit of a hit because there's a lot of disappointed investors, and I don't blame them. You know, we came into this thinking things were going great in terms of growth. But mind you, like the companies, it's not lacking growth. It's more or less they just don't want to chuck out a lot of money to push for too much growth. This company has always been about profitability, as you can see, like on last year's results, 56 million in added revenues, yet 40 million goes towards the net profit. So like if I ask you how many companies can do that, how many companies earn net profits like that? So it's quite incredible. It's an incredible, you know, like those incredible margins. And as a company that's always watching at the finances, they're not going to just push a lot of money out the door to chase growth. So you can, and which has kind of like ended up being a bad thing for it because like people wanted growth, but of course people also wanted profits. Um, but I think it wouldn't have been a bad idea to go earn a little bit less profits and hire, you know, a bigger sales team to chase even more growth because you're entering a lot of new markets. So you know, it might not be a bad idea to just go, you know, a bit more into these markets. Though you have in Inmode a really like stable, reliable management team that will not push out finances unless they know there's demand for the machines in the current market. So they're not coming into like 10 different countries and going, we're going to spend all the money we need to push out growth no matter what. Management team has talked about this before. They have said we will only come into a market when we know it, you know, we can gain traction. So like they go into a market, they see how the machines sell, which probably means they assess it over like a 6-month time frame. And then once they're happy, they, you know, go all out in terms of a sales team, and they push for the sales. They try to grow. So in terms of growth, I don't think the company is going to ever be short of growth. Not at least not in the next few years. So yeah, like I think the company is still a very much a good company to be in to invest. Though you know it's not going to be as, you know, like high potential as I thought it would be. It'll still potentially be about a 40 to 50% gain on this company, which is still quite an amazing return. So, you know, like I think as much as the share price has gone down and a lot of investors wondering what just happened, because it's literally like good results but a punch in the face. So yeah, like I think there's like no sugarcoating that decline in growth. But it definitely makes up for it in those amazing profits it's producing. So hopefully that it just kind of just answers the, you know, the concern over this company, you know, the reason why the share price dropped, and whether you want to stay in this company or it's a company that you potentially want to buy. Hopefully that answers the questions. Yeah, I mean, Yeah, I think basically it. If you've got any other questions, let me know in the comment section, or if you've got other stocks you want me to look at, let me know. That watch list is that list of companies I need to look at is probably building quite a lot. I wanted to get these results written on the whiteboard today, but I seem to be lacking a bit of time. So hopefully I can get more stuff onto the whiteboard format with some of the more in-depth company. But I think with Inmode, there's not a lot of results that I need to go through. It's just more looking at these growth rates and the profit, because in general, they're a company that sells machines, and they're not showing anything that looks too concerning that needs to be highlighted. It's just more the reduced growth rate that we're a bit concerned about because it dropped. But apart from that, I think yeah, um, most things are pretty straightforward with this company. I think the thing that as a kicker is just the growth dropping. Apart from that, yeah, that's all. Until then, yeah, good luck investing, everyone. Yeah, do let me know if you have other companies, though it might just take me a little longer to get to that list of companies because they're just like slowly building up. But in terms of this company, I think there's still growth, profits are amazing, still a very worthy company to invest in.